Welcome. After about 10 years of trading experience, I would like to cover the 6 most important technical analysis concepts that I think every new trader should master in order to make really highly accurate and precise trading decisions. These are the 6 factors that I'm always combining in a very specific way with important context in mind to make the accurate predictions that I do in all my technical analysis videos and also the trade calls in my Discord group in real time. So this video is going to be part 1 of a 6-part video lesson series where I'll be starting with sweeps on significant levels. Then in the future videos, getting into the hidden divergence, regular divergence, directional bias, momentum, funding, spot premium, and open interest, and how all of these different factors work together in a specific way to give us very highly accurate and precise analysis when making trading decisions. So, it might sound simple at first, each of these individual concepts, but there's a lot of context and nuance that I need to discuss for each of these 6 factors. So it is important to kind of break things down one by one. That's why I'll do a 6-part video series. And hopefully, by the end of this 6-part video series, you guys are going to be pretty close to me as far as the analysis that I'm doing. And you guys should be able to make some pretty accurate decisions when it comes to your trading decisions or just your technical analysis. So for this video, instead of going in and showing a bunch of random historical examples to kind of illustrate the points that I'm making, I'm just going to use examples from calls that I made in real time recently to kind of better show that it can be done in real time and that it's not just a bunch of hindsight trading. So anyone who has been following me, my videos, or for a while, or has been in my Discord group can kind of vouch for the accuracy of my analysis. So hopefully after this 6-part series, you guys will pretty much know as much as I do when it comes to technical analysis. Now, essentially, that's going to be it for the intro here. I do want to kind of quickly, before getting into all the meat of this lesson, I do want to give a shout out to my Discord group. So if you guys are interested in joining, it's completely free. Just send me a message on Twitter. I'm frequently updating what I'm expecting from the market and also when I'm interested in taking trades. So check it out. Just message me on Twitter. Links in the description for my Twitter if you want to get added to the Discord group, and I'll send you an invite link. Just simply message me, hey, could you send me an invite link to the Discord? I'm interested in joining. And then also affiliate links. Would appreciate it. If you guys want an exchange to trade on, there's affiliate link for BingX Exchange or Bybit Exchange. BingX, the perk of it is that it has no KYC. Allows trading of crypto, stocks, forex, commodities, and Bybit, it is KYC required and exclusively crypto trading. So I love Bybit, but BingX is also available to those of you who can't use Bybit due to the KYC requirement, essentially. So now, with that all being said, let's get into things. So this lesson on sweeps of significant levels with important context applied using examples that I have analyzed in real time recently. All right, so let's start by marking out significant levels. What actually is a significant level? Well, it's really just a place where in a trend we saw the largest pullback or pause in the overall trend. So if we look at this whole move down, which is the previous bear market in Bitcoin, our biggest pause and pullback is very clearly right here. The peak of this pullback is very, very clearly the largest pullback amongst this entire downtrend. And then we can mark out less significant highs and or lows depending on our trend direction. So let's just mark in some of these levels so that we can kind of get into some talking about the examples that I'm going to be covering here. So now our current trend our uptrend here, we can mark out some significant lows that we also had swept. And it's really important to combine directional bias with significant levels when we're talking about when to be either using a significant level as an entry point or using a significant level as a profit target / area to expect the potential for a larger pullback. So what I mean by that is we need to have a directional bias. And so throughout this move, directional bias has been to the upside. And when the directional bias is to the upside, we look for sweeps on significant lows as potential entry points. But when our directional bias is up, we use sweeps on significant previous highs that are untapped as areas to take profit and to expect a larger pullback or pause. All right, so let's get into some examples here, things that I've talked about throughout this uptrend, and where the whole time the directional bias was to the upside. So as I just said, sweeps on lows during this uptrend are looked at as good potential entry opportunities, and sweeps on previous highs from a previous downtrend are looked at as areas to take profit targets, and or an area where we expect a more significant pullback to take place, okay? Or potentially just a pause or consolidation. So let's go through all of these as this move came up here. So we have our first significant high right here. We have our significant low right here, and a less significant low, but still a low here, below pullback. So it's just a pullback within a trend. This significant high over here is taken out. And so, as I was saying earlier, if we have a directional bias, which is to the upside, which that's what it was here, price was over the 200 EMA, and we're going to get into that a lot more about how to determine directional bias, but in this case, the directional bias was to the upside. So the expectation when price hits this significant high over here and takes it out, sweeps it, is we're going to see a pullback or at least a pause / consolidation. So this could be a profit target or just an area to expect the pullback or consolidation. Well, we got our pullback, and luckily what happened was we swept some significant lows on this pullback. What do we do when our directional bias is to the upside and we sweep a significant low? Well, we look for a potential entry below these significant lows, as this is usually a stop loss hunt move. And this is actually going to be combined with other factors. So when we sweep a significant low and our directional bias is to the upside, down here, we combine in those other factors that I had on the list: regular bullish divergence of a lower time frame, hidden bullish divergence, and we can look at funding rates. We can look at open interest and other things, which I'll get more into in other videos, but just keep in mind that this is going to be a combination of factors when we come down. But the idea of this video for sweep on significant levels, sweep on significant low with the context of an uptrend or bias to the upside, is looking for an entry below these lows, significant lows. That's where we're looking for the entry when our bias is to the upside, okay? And what would our profit target be? From this sweep, we look to our next significant high that's untapped of the previous downtrend. This here, right here, 32,455, that would be the profit target for an entry down here on this daily time frame trend. Now we can move on here. So this comes up. We don't take out any significant highs on this move up here. We consolidate, but we do take out a significant low. So another potential area to look for an entry down in this area with other factors in mind: hidden bullish divergence, regular bullish divergence, funding rates going negative, spot premium negative, and we look for open interest to see what was happening on this move down. Did we flush out a bunch of longs? And I'll get into that more on those video lessons, but I'm just saying kind of the different factors that go into it other than just the sweep on a low. Now let's move on. So we come up, we do hit this significant high. Remember, we're expecting some sort of pause or consolidation or pullback here. We don't really get it. We didn't really need it for this specific one. It's not going to happen all the time because we already had such a significant consolidation just below that level. Okay, so it's not always going to happen every time, but we want to be cautious, and that could be a profit target right there at that level for entries from lower, here or here. Okay, so that's what the idea is there. We're not going to be shorting these highs because we have the bias, which is to the upside. Okay, so next untapped high that we could be targeting for this move right here, 48.2. I talked about this level many times, and as this move went up, I constantly said keep on waiting for 48.2 to be hit before any sort of significant pullback on this trending move to the upside. Made multiple videos about it, multiple posts about it in my Discord group. So another one where I was looking for this level, 48.2, and then, okay, closing entire position from any trades entered down here along the way up from whatever setup that may have been there on lower time frames. That is where we stop getting interested in entering longs, exit, take profit. Expect a pullback, expect a pause when we hit this significant high from this previous downtrend. And that one is a more significant level because, as I said earlier, this is the most significant pullback in this entire downtrend here. These other ones are less significant. So when a level is less significant, we're not expecting as significant of a reaction at that level. Okay, so we came up here, we took out this high, we got our pullback. Now we look again, significant lows. Look, we have two significant lows here, both untapped and relatively equal. We come down, we take out those lows. We look at other factors as we take out those lows, which we'll get into more in the other videos, but bullish divergence, hidden bullish divergence, funding rates, open interest, spot premium, things along those lines that I will be covering in the other videos. Again, we get down there, and what I make videos about on my channel, looking to buy down here. We're sweeping these lows. We're looking to buy here. And all these other factors that I'm entering are looking good as we come down here. So things line up, the stars align. Next profit target, when I was looking for a position down here, was our next untapped significant high. Okay, so 52K. And we have now hit the 52K level. So what's the anticipation when we hit a significant high when our bias is to the upside? Well, it's just a pause or pullback, and then we can look for our next low to be swept. We look for those other factors. We look for a combination of things. Okay, so what's our next target going to be once we see this pullback complete and we look at those other factors, look for a setup there? Well, it's going to be right around 59, or kind of a cluster of highs over here. So it'll be in this range here, between 59 and 61 in this area. But to be conservative, 59 is going to be that level where it's the profit taking level. It's the level to expect somewhat of a pullback, especially if we have bearish divergence forming up there and funding rates are really high, and we can kind of see that things are getting a little too extended. Profit taking level, expecting a pause or a pullback of a pretty significant degree once we reach a level like this. Okay, so that is kind of how these levels, significant sweeps, work, and how I use them practically with context of our directional bias and those other factors I discussed, all together to really have profit targets, where to expect pauses and pullbacks, and where to get into a position. So it's used in different ways depending on the directional bias. So of course I've said it many times, but I'm just reiterating it many times. When our directional bias is to the upside, sweeps on highs are profit targets and or levels to expect a larger pullback or pause, but they're not levels to short. And when we want to get long, we look for sweeps on significant lows in the context of our uptrend. It's all the opposite if price is in a downtrend and our directional bias is to the downside. Okay, so you can just flip everything, switch it all around if the directional bias is to the downside, we can look at everything in the opposite way compared to what my uptrend bias examples are. But these are all the examples that I've covered recently, so I'm using these ones to demonstrate things, because it shows that, yes, you can actually look at these things in real time. It's not just hindsight trading. I've discussed these things on my channel. I've discussed it in the Discord group when it's actually happening, and talking about taking a position at these levels, or taking profit at these levels as well, depending on what we're talking about, a sweep on a low or a sweep on a high, okay? So that's going to pretty much cover it for the sweeps on significant levels lesson video. And of course, these things are all going to be talked about again in all the future videos, because we're combining all these different factors. But this is just focusing on the significant levels. We'll get into how significant levels combined with divergence, combined with those other factors that I have on my list of 6 technical analysis factors, kind of play together to our advantage. So that's going to be it. Thank you guys for watching. Message me on Twitter if you want to join the Discord, and I'll make the next lesson video in a short while.